All right, everybody, welcome. Welcome to Impact Matters. This is the second edition, and we are a monthly webcast with cutting-edge thinkers and change agents on the topic of impact. I'm Amy Hall, founder and president of Impactorum, a coaching and advisory service for sustainability, circularity, and CSR professionals. And I'm also the vice president of social consciousness at Eileen Fisher, where I've been for 27 years. And with me is Anela Doishik, a former colleague of mine who's helping to facilitate this webcast.
Hi, everyone. So I'm Anela, and I am on here today just helping manage some of the behind the scenes logistics and the Q&A process. Before we start, I wanted to mention a couple of things. Along the bottom of your screen, you should see both a chat and a Q&A function. If you do want to submit a question for Amy or Morgan, please do so through the Q&A. Otherwise, actually for the Q&A, we're going to hold about 15 minutes at the end to answer questions live. Otherwise, feel free to use the chat function throughout the session if you want to discuss and connect with other attendees. The only thing I would mention, if you are using the chat, right now the default setting is set to send your messages to all panelists only. You're going to have to change that so it says all panelists and attendees, and that will make your message visible to everybody that's on the call today. So you can do that when you open the chat box. You'll see the option to toggle right at the bottom of the chat. So yeah, that's it for me, and I will link back up with you guys in the Q&A.
Cool, thanks so much, Anela. So I'm really excited to introduce you to our guest today, Morgan Simon. I first met Morgan well over a decade ago when we were both board members for what was then called the Social Venture Network. It's now the Social Venture Circle. And what impressed me about Morgan at that time, aside from her all-around brilliance, was that she is incredibly visionary, she's creative, and she has a very, just a deep, deep commitment to social, racial, economic, and environmental justice. She has founded or co-founded several organizations, including the Responsible Endowments Coalition, Tonic, Transform Finance, and the Candide Group. And in 2017, Morgan published her first book, Real Impact, right here, The New Economics of Social Change. And I could go on about her incredible dancing and her singing, but I'm not going to embarrass her. Today, I look forward to hearing about Morgan's journey, where she gets her inspiration, how she approaches impact, and what she thinks of the state of impact investing in general. So I'm going to bring Morgan on and say hello. Let's see here. We got that. Oh my gosh, this is where my hosting abilities are limited. I have to first get there you are. But wait, you're muted.
You're doing great.
Okay, yay.
Thank
Welcome,
you, Amy.
Morgan.
It's great to be here with you.
Yay. So I just have to start with a very obvious question, which is, how are you doing today, right now, in this moment, after being, I assume, quarantined for like 4 months, and you are in California, you're in the hot spot. So how are
I'm
you
in
doing?
California, which means we are still quarantined. And I guess I would say from the perspective of being both an impact investor and an advocate for the thoughtful use of money in the world, the idea that COVID helped to expose a lot of the cracks in the economy, and in particular, the incredible lack of safety net for the majority of Americans, coupled with the death of George Floyd and the broader recognition, and Breonna Taylor, and the broader recognition about the depth of systemic racism in the US, and a lot of people really dealing with that in a much deeper way for the first time, as opposed to just focusing on specific incidents, which of course happened throughout American history. But it's raised a lot of great questions around uses of capital and the way that capital has been used to divide communities, but can also be an incredible tool to empower communities. So I would say that I am angry and inspired in equal measure, and have been really grateful to be able to support people in the community who are trying to do some of that deeper inquiry of what they can do with their money at this moment.
Wow. Okay. So before we get into that, I'd love for you, if you wouldn't mind, talking a little bit about kind of how you got into this, telling a little about your journey, your personal journey, which started, as far as I know, at least in college, if not earlier.
Sure. I would say it's funny. One of the things that oftentimes, as someone who, you know, has done social change work my entire life and a lot of speaking, is that a common question is like, what was the moment where you changed, where you started to get inspired? And I always thought that that was a bizarre paradigm, because I feel like it's very difficult to grow up in America and not be keenly aware of all the inequality that's around you.
And yet,
and all
there are a
the
lot of people
challenges.
who aren't aware. Having said that, right?
Yes, and I think that's part of why, like, when was your epiphany, right, to make you want to do social change is kind of like a common question. And that's not even the question you asked, to be clear, but it's always interesting to me that my answer has always been that I've always been this way. So I started off as a teenager in Los Angeles, working mostly, you know, grew up pretty middle class, going to really great schools, and I'm very grateful for that. And when I was 14, started some tutoring programs in some of the East LA and more Latino immigrant-centric communities. And I think through that experience, really learned the difference between charity and solidarity. And that charity is often kind of seeing people as less than you and trying to reach out to help them, as opposed to solidarity coming from a much deeper feeling of love and treating people like they're your family. In the same way that if your sister happened to be on the street hungry, you wouldn't be questioning, well, did you make bad life choices? Or, you know, you'd be like, hey, come in and eat, right? So I think in that way, there were all these largely Mexican immigrant families that took me in from a very young age. And then when I started to see the terrible conditions that these undocumented moms were dealing with at work, or these kids struggling to learn in these classrooms of 50 kids and kind of wondering if it was all worth it, it was very personal to me. It really felt like wanting to defend my family. So I've tried to always act with that broader definition of family. And even though this might sound like a funny plot twist, that really led me to want to work on economic issues, and that just this early recognition that you couldn't solve housing if you didn't solve education, if you didn't solve workplaces, if you didn't solve immigration, and that all of these social issues had a money story behind that story of what are the financial incentives that are keeping things this way. And I also was very aware as a white middle-class American that I had access to systems of finance in ways that other communities did not, right? That I could look the part, as it were, and that's where I was going to be more effective than as a frontline activist. And then when I got to university, it occurred to me, and I went to Swarthmore in Pennsylvania, I figured it was the only time in my life, I mean, I've got some years left, but very unlikely that I would be a billionaire on my own accord. And that being part of a school community with $1 billion endowment for at least 4 years was my big opportunity, right? And that I wanted to really seize that. So I started to do corporate engagement using the stock of my school. And filed a shareholder resolution at Lockheed Martin. It was one of the first student-led resolutions since the apartheid era. And we won that campaign, and were able to get, yeah.
I just want to find out from you, how was that conversation, that first conversation when you went to the school board or the school administration and said, I have this crazy idea, and you know, they probably had never even thought about what was behind their endowment funds. How did you get them on board with you?
Well, I think, you know, they say as activists, we always stand on the shoulders of giants, and it's that there was already on a committee on investor responsibility that activists going back to the 1980s to the anti-apartheid movements had really set that ground stage. But then there's also how do you build on what people have done in the past? And it's that the school had been receptive to divestment asks and had started voting their proxy statements. I know there's a lot of folks who may be familiar with that kind of corporate environment, but they'd never filed a resolution. So that's kind of the step that I push them a little bit further. And I think that's where we always have our moment in whatever structure of like, what is the one step further that you're able to push that ball. And for me, it was convincing the school to file resolution. And that conversation, which I think it's interesting, I think from the Eileen Fisher context or in general in thinking about CSR, the initiatives, right, that are always kind of the easiest to push is that when the financial incentive and the social environmental incentive line up so seamlessly that even it's impossible to say no, basically. And from that perspective, you know, I started off working on LGBT rights of getting companies like Lockheed to start giving domestic partner benefits, to put sexual orientation in their non-discrimination clause. And going back to my thesis around economic justice, I have kind of equal passion for any number of social issues, that it could have been anti-discrimination or any other potential factor. But in this case in particular, we were able to say, look, why would you as a company want to tell 10% of your potential workforce that you're not welcome here? Like, that is just a bad business decision from a hiring perspective. And it was also very off-brand for a progressive institution like Swarthmore that even back in 2000 when I was there was starting to have gender-neutral bathrooms, right? So there was this ability to say, let's pinpoint the issues where we can clearly see that there's a financial incentive to companies to do this. I think sustainability is another great area where when you had I'm forgetting this moment if it was, I think it was BP or Shell saying that they only had 9 years left of oil reserves. You know, if you're trying to manage a foundation for 30 years, that's not a good look, right? So there's some of those financial cases that I think are very strong, and being able to couple that with the social rationale was big. I would say, and I'll give a much more abbreviated version of the 20 years after that. But basically, I'm now founding partner at Candide Group. We've been around for 7 years. We have over 120 million in assets under management, about 88 companies and funds that we've invested in. Over half of those are led by women and people of color. And it's that I really wanted to focus beyond kind of beating up corporations to more of the how do we start to build the world that we want to see. And I think ultimately we need to do both. But I'm kind of more of a lover than a fighter by nature. And that's been a really great place for me to sit, whether it's finance and solar for the Navajo Nation, or direct trade cacao, or worker co-ops in the US. You know, we've been able to do a real diversity of activity. And through that, I think have asked some deeper questions sometimes around really thinking of investing as about a broader sense of legacy. So I guess I bring this up to say, I don't think that the quote unquote financial and social incentives always need to line up. If your financial incentive is to make as much money as possible in a way that may harm others, right? So people often ask of impact investing, is it market rate? Which I think is a kind of ridiculous question, because if the market is where we destroy the environment and treat people deplorably, maybe that's not where I want to set my standard, as opposed to what do investments look like that really treat people on the planet well. They might outperform those traditional investments. I'm not saying that they can't, but the point is, what do we want to index as our future? And just because everyone has done something a certain way, like they say in finance, you'll never get fired for buying General Electric, right, for doing what everybody else did. That doesn't mean that it's right. And that we need to start inventing new standards.
Okay, so there's so many ways we could go with this right now, but the thing that I want to dive into a little bit more before we go really deep is just kind of how do we think about impact investing? And so I grabbed a very common definition, which I think is pretty household. These are investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. Does that make sense? How do you feel about that? Does that make sense to you? Is there anything different about how you look at what you do?
It's a great question. And one of the things I appreciate about it is just noting that I believe that's the Rockefeller Foundation's definition. It's like the traditional definition. And the reason for that is that impact investing started off as a marketing campaign, right? That people have been doing this for generations, but that Rockefeller was the first to say, we need to name this, we need to put it on the map, we need to inspire the mainstream players to do it. And in order to do that, we need to have a name, right? So 1, 2, 3, everybody call it impact investing. That happened around, I think it was 2007. So even those of us who had been doing it for, a decade before that, I was certainly appreciative, because I think it is important in the naming and framing. That is part of what helped bring this movement along. I think as a definition, it's a good starting place. I think the part that requires a deeper interrogation, and that I think is a lot of the substance of my book, is that the intentionality part, right? When it says investments that are intended to do good, who is deciding what that intention is then really matters. And that too often, and I think that this is true whether in the investor context or in the CSR context, if we're just sitting in an office on the 40th floor determining what impact is for a community, then we are likely to fail, right? That like our intention is not going to match the grassroots reality. And that's where I feel like some of the stories you've told me, Amy, over the years of like you being out in the field in India or China or in different places, and like really making sure that you're hearing directly from whether it's workers or other actors in the supply chain, that there's no shortcut for that. And that goes back to like, sure, you could say it's expensive or it's time consuming. It's more expensive, I think, ultimately to ignore those realities and then have to do the cleanup where what you intended as impact is not real.
I completely agree with you. And one of the examples that I got from your book, again, Real Impact, for those who haven't read it, I have read it, I've made lots of notes. You apparently, and I think this is still true, you spend a lot of time in the communities that you're investing in. And one of the examples you bring up in the book is the favelas of Brazil. I mean, and not just dipping in for a day or two, but you'll spend weeks at a time living among the community, the people that you're interested in what's the word? Helping isn't exactly, investing in, right?
Yes.
Is that still true? And why is that important?
That is still true. So it's now been 6 years that I've been living at least 2 months of the year in the favelas of Rio, and then sometime as well in Salvador de Bahia. And basically, I went from kind of very early in my career when I was in Sierra Leone and Honduras and kind of doing these longer stints of time in communities, in very rural communities, where you get to learn so much from the rhythms of life. And that I later felt as an investor, when you're going down for just like the 4-day visit and you're getting seen what people want you to see because they're reasonably terrified, they're not going to get the money, they're not going to get the contract. Sorry, that was just a battery warning. That it makes sense, right? That they're going to try to show you the best of what they're capable of. And at the same time, when we are making decisions for other people's lives, we need to be in a position of deep understanding. And I recognize that for me to do that, I needed to be, going back to this charity versus solidarity thing, I needed to be seen more as a peer. And it helps. I think what's interesting, people have different passions. For me, it's dance. I've been a dancer all my life, and musician as well. And whether it's sports, whether it's however you tend to connect with people in your social life, I've found I can show up in most communities around the world and find the dancers. And that gives me an instant community, particularly in a place like Brazil, where, and speaking the language, right, that it's easy enough for people just got to know me as a person. They knew I was on my laptop all the time, and now over the years, there are definitely people in the community who know better what I do, and that we're able to collaborate more directly. But I want to just noting as an investor, it's things as simple as the evolution of how people have been using their cell phones over the last 6 years is massive, right? And what that means in terms of data collection, what that means in terms of markets, and even getting to see that in real time really matters. Getting to see, and I know that this applies differently in different parts of the world, what are the attitudes around work, right? Of how much do people really want to work, that their idea of success might not be the same as ours. What are the holidays and the periods that are really important to them? How do they treat time with family versus time at work? So these are the sorts of pieces that I know it's helpful that, you know, I don't have children. I have a certain amount of mobility in my life that I'm able to do that. I know it's not for everybody, or it can be a great thing to drag your kids along too.
So
but
this
I
is
definitely
interesting.
prioritized it.
Because years ago, when I was starting out in, you know, corporate social responsibility, one of the crazy ideas I had at the time, and I got talked out of it, unfortunately, was could I or somebody else, you know, in the company go and actually, you know, live on the factory grounds with the people who were making our clothes? You know, they have dorms there. And actually, the reason I got talked out of it was because people felt like they would never stop seeing me as kind of their ultimate source of income and the ultimate kind of power person in charge. And I wonder how you overcome that, or if you overcome it, just to be completely, you know, cynical about it, I guess.
Sure. So I think two things. One is that I'm typically, this may sound odd from this perspective, but not necessarily doing it in the communities I'm investing in. And they actually are not. I realize, like the favela in Brazil, I've helped with some philanthropic fundraising, like with COVID, we did a GoFundMe and supporting some of the community leaders, but I've never done any investing. So from that perspective, and that honestly has more to do with like currency exchange and like different factors. But I think the point is, it's not that even one community's experience like directly applies to another. Obviously, you still need to make sure that you're getting a sense of wherever you are, whatever you're doing. But the extent to which that gets me closer to the ground gives me a starting place for the next community I might be approaching. And then the other I'll note is that I live in Oakland, California, right? And I would say some folks would call that Silicon Valley adjacent. But it's very different being an investor here with an office right smack in the middle of downtown Oakland, that literally every community protest I can see from my window. And that our office is co-located with a number of activist groups. So making sure consistently that we're getting that on the ground perspective. So it's not, I wouldn't say that any one of these practices has been like uniquely transformative. But I think what's important is infusing that into our company culture as Candide Group, right? That it's something that having that type of grassroots connection and, when possible, structures of direct accountability are important to us. So to give one more example, we last year started a fund called Olamina, which is a $40 million debt fund that's largely devoted to communities of color for economic development, mostly Black and Native American. And with that, we are in the final stages of assembling a community advisory board. And these are community members who are deeply respected in their fields and in community development locally across the country, who are going to have a vote at the investment committee level, right? And that's part of making sure that it's not just us making decisions for communities, but them getting to really be part of that process and to learn along the way about the use of capital.
So again, I could go deep into this, but now it begs the question, you know, who else, is anybody else doing things the way you do? And you also talk about in your book this idea of co-creating the manifesto, co-creating, you know, the principles around which you may think about your investing or plan your investing. And so does anybody else, you know, use these same methods or approaches that you do? And if not, why not?
There's definitely, and I wonder if I could write these in the chat box, or perhaps if someone could as I'm going down. I would say that there's a mix of both organizations that are in the support ecosystem and then specific funds and enterprises, if that makes sense. So groups like Transform Finance, groups like, I think they just changed their name. It used to be called Volley, but I think it's now called Common Council or Common Cause.
Something like that.
Some of the work that Valerie Redhole Small is doing through Social Venture Circle, folks like Natalie Molina with Builder Capital, and then the Common Dreams. Thank you. I knew there was a common in there. And then there's a number of funds like Shared Capital, like the Working World, which I think may also have recently changed its name, that are really trying to drive more community-led processes. So that's part of the ecosystem that we're seeing growing all the time.
So the good news is you feel like you're saying that this kind of philosophy around community-led or community-based investing is growing, right? It's spreading, and maybe some of the more conventional, I'm going to lead you on with this, but some of the more conventional approaches might be taking a second look, right? Maybe some of their ideas are a little bit outdated now. And I guess the bottom line, not to make a pun, for most of these is, will they actually make money? Will they make enough money? And if so, then maybe, your approach is the way we want to go if we can actually prove that it's profitable, right?
So what we tend to do in terms of financial performance, because we are definitely keenly focused on that, what we would say is that every investment, you have some objective that you're trying to achieve financially. I have mandates from different clients. So Candide Group works with families, foundations, athletes, and other influencers that want their money working for justice. In some cases, it might be a first-generation wealth holder who is laser focused on creating wealth for their grandkids and that they want to beat market rate returns. We have portfolios that do that. I would contrast that with, I have another portfolio where their objective, they actually feel that they have more money than they really need in life, and that some of that has been unfairly acquired, right? That there's basically that the history of that may have implied some exploitation, because that's the truth with a lot of wealth in America, let's be real. And that they actually want a negative 80% return profile.
Whoa.
Or sorry, negative 20, so 80% back. And what's important about that, though, as a financial manager, the way I take that is, I'm not going to get you minus 25. I'm not going to get you minus 18. I am shooting for minus 20, right? Like, I think what's most important in terms of our finances is we want consistency, that we want to know whether it's a grant budget or our children's college education or like whatever the objective might be, that's going to be there. And it might mean in some instances not swinging for the fences from a risk perspective, if that might yield you more return, but it might also turn into a disaster, and you're not getting that money you needed for college. So we try to just be really specific with people of what is your need? How much money do you need? Is it more or less than what you have? Why and how? And what do you want to be supporting in that process? And then we use that financial objective as a constraint to then maximize the amount of impact that we can have.
Okay, so since, here we are, we're trying to get at impact, right? This idea of impact investing. And I've read that this is on your website, rarely ask for impact measurements per se in the way that we might normally think of them, but you look for impact management as a measure of success. So is this a gut feeling, or how do you understand what the impact management of a given project or investment is?
So just to clarify between those terms, right? So
okay.
Impact measurement can sometimes feel like impact in the rearview mirror, that you get to the end of the year, and in the same way you say, okay, we produced X number of widgets and we helped X number of women in the process. And next year we'll come back and let you know how many we helped, right? And it may be more than last year, it might be less, who knows? We don't have any really specific goal, but we promise to tell you what we did. I don't find that very satisfying. And the impact management is more saying, particularly as an investor, I think about it a lot in terms of, I don't want to just take credit for someone else's work. That it's very easy to put money into something and then be like, look, we built 1,000 wells. And it's like, no, you didn't, right? Like that enterprise did. And your capital was like one building block, within that. And you could try to do some technical calculation of like what percentage of the capital came from you, et cetera, et cetera. But I think what's more important is how did you incrementally help that entrepreneur succeed, right? Or that fund manager or whatnot. And what are the ways that you were able to support their practices, their needs in terms of impact? And then also were there specific goals in terms of what they were trying to do better? And I think about that a lot when I see responsible companies that do great CSR, right? When they might say, here's 5 different areas where we could have impact. And each year we're going to try to push the bar a little bit on everything, but that we have concrete goals and we're able to say where we're falling behind, right? And then really investigate the reasons why. So I think in that same way, if you think about financial management, you get to the end of the year, you're going to have a clear projection of here's what we think is going to happen during the year. There's going to be a quarterly meeting to see how we're doing. We're going to make adjustments. We're going to see like, where are we failing? Do we need to put more into this initiative? Do we need to put more money here? The same thing should go for impact management, right? That you need to treat the management of your impact just as actively as you do your financial management. So that's what we tend to think about in the same way as investors, right? That you're often checking in with companies. How are they doing on raising their next round of capital? Or are there certain sales relationships that they need? And that your job as an investor is to try to hustle and like get them often the connections that they're looking for. And in that same way, when a company comes to me and says, I'm interested in this ESOP thing, but I also heard about perpetual purpose trust, and I don't really know, like if I want more employee ownership, what's the most effective way to do that? Who can I talk to? Can you connect me with them, right? Or I'm trying to do more sustainable sourcing on a certain part of my supply chain. Who do we know who can deliver that? And that's where in my annual reporting to my investors, where I'm letting them know not just here's the number of widgets, right? But what did I do as an investor to enhance the number of widgets? That's what I mean by management.
Got it. Thank you.
I'm going to plug in here.
Great, that would be good. I hate to lose you during this, this hour. While we have a wonderful view of your china cabinet, just a question now about.
Is that okay? Perfect.
Yeah, that's good. Well, what do you turn down? What sorts of projects don't interest you?
We turn down a lot of projects. That's probably the people that hate me the most. It's one of the things as an investor, you have to get a really thick skin around saying no, and being really clear about why. So we do try as much as possible to always give feedback to people, so it's not just this black box of things. But I guess I would say, our general bar for what's going to be included in our pipeline is that we're really thinking about social transformation. I know it sounds really Pollyanna, but like roll with me. So basically that there's a lot of interventions that we see that will make it slightly less miserable to be poor. That might make it 20 years versus 10 before we all die of climate change, right? But that are essentially not addressing the fundamental inequities that drive this system of accumulation. And that we're like, we don't just want to kind of move slower on that roller coaster, we want to get off that path. So that's really our primary filter for any sector, geography. I mean, we are more US focused in general, but we do invest globally, that we want to look at a sector and say, what's the transformative impact? So to give an example of that, there's a number of artisanal chocolate companies that are directly sourcing beans, and that's great. And that might make a dent, to some degree. Or fair trade oriented companies, but fair trade for chocolate is an extra 2 cents a kilo. And obviously you get the price stability, which is great, but in terms of actual farmer income has very minimal impact. So we invested in Uncommon Cacao. It's also featured as a chapter of the book, where their pledge was whatever the value is, we want the majority of it to go to farmers. That's a radical shift in how you think about supply chains, and implies a very different relationship and a very different outcome, right? You need not just the optics, but the outcome. And it's that these farmers are often getting 3 times as much as the fair trade price. So that's, I would say I'm looking at fairness from 2 levels of like what is actually livable, for that farmer, right? And that's where I don't want it to just be a little bit less miserable to be poor. I want them to be not poor. But then also I want to know, is it fair, right? Is it that I might be paying them more, but I'm still structurally being extractive? And one of the things I'm often assessing is, as investors, are we adding more value than we extract? Because if not, then we shouldn't be there.
And so in the end, this is, you know, kind of wrapping up this idea, how do you actually then define impact? Or do you feel like you've already answered that question?
No, that's okay. I think my approach, maybe rather than a definition, is that it's about asking questions. And that in general, what I think makes someone a good investor, right, whether it's finance or otherwise, is I am a hell of a know-it-all. I want to admit that up front, but I don't know everything, right? And particularly when I'm investing across so many different sectors and geographies, like, is wind energy going to work on Pine Ridge versus how solar is going to do on the Navajo Nation, or like, what is the right price for cacao? This is stuff that I, don't know intrinsically, but as a good investor, I know who to call and ask. Does that make sense? That, like, your value as an investor is, do you have people who will pick up the phone when you call and let you know what's what? And in that same way, there are times when I'm evaluating the impact of the company, this kind of circling back, I call the favela in Brazil. I'm like, hey, this intervention is designed to help. I know you're the teacher in the community. Would you use this product, right? That's the type of feedback that I want to make sure I'm getting. And that these sorts of questions of, is this actually transformative impact, or is this kind of just messing at the margins of a broken system? Those are questions that you have to ask every time. And that anytime you get stuck in a definition, you're behind already. Does that make sense? So I think that's part of why I wouldn't want to set a standard. The closest thing that I've set as a standard was the transform finance principles, which are threefold: balancing risk and return between investors, entrepreneurs, and communities, making sure to add more value than you extract, and then engaging communities in design, governance, and ownership. Right? And those are very broad. And I think that's the point, that they're going to apply differently in any particular situation. But that we have to constantly ask those questions in whatever we're doing, and be asking the right people if we're going to be able to get to impact.
Okay, and before we go to the questions from the audience, so if you haven't asked your question and gotten it in the chat or the Q&A, please do so now. I'm curious if you have advice for people out who are watching, if they have already are working with an investor of some sort, or looking for somebody, what are some questions, or what's the one big question that you hope they'll ask as they're making their decision about who to work with?
Sure. So one of the things I think is important, and already we'll get a little bit into one of the questions here, of how do you engage with impact investing for any of the non-billionaires on the phone? So basically, I think what is amazing about engaging in economic activism, we only get to vote every 4 years, right? But money is the vote you make every day. And that can be where you choose to spend it, right? I really appreciate whoever threw in the chat box. Same on my personal website. I have, like, here's the link to Amazon for my book, but if you can support Busboys and Poets, that's way better. Here's the link for that, right? And yes, it is a major price difference. Going to be upfront about that. But you get to make that choice, right? And sometimes there isn't a price difference, depends on the product. But that where we spend our money and what we view as important is a really major vote for us to take. Second is that we get to do that not just through our own bank accounts, but through our institutional connections. So if you are part of a corporation that is doing investing, if you went to a university, that if you ever donate to them, along your check saying, hey, where is this money going? How is it being invested, right? Checking out the endowment there. If you have a family member that works for the state or is a teacher, they are likely connected to a multi-billion or trillion-dollar pension fund. And that some of the pension funds like CalPERS in California, NYSERS in New York, have been some of the most active in terms of corporate reform. So noting that you don't have to be the billionaire to get to act like one, right? And I think that's the opportunity that we often miss. Then in terms of individual opportunities for participation, there are more platforms, and anything that I'm sharing is financial education. It's not financial advice. I am a registered investment advisor, so I speak compliance very fluently. That there are platforms like Open Invest, like C Note, that have, as low as $1,000 minimums to be able to jump in on impact investing. Calvert Notes as well. Some of these are going to be debt, some of these are going to be stocks, different types of tools that you can use. I would note that the easiest thing is to just check out where you bank. One of the, I guess I would note that along with investing money, which is the main activity of Candide Group, we've been very active in changing the culture of money, right? And getting people to really think about where is their money spending the night, and that regardless of your wealth level, that this is the opportunity that you have. And we've done a lot of this through our nonprofit side of the house, which is called Real Money Moves. And to just give an example there, if anyone on the line is banking with Chase or Wells Fargo or Bank of the West or BNP Paribas, that you may or may not be aware that as the family separation, I would say scandal, was rocking the US and rocking the US border, that 70% of those immigrants were held in private facilities, right? Companies that are making as much as $700 a night. We might as well have been putting people up in the Ritz-Carlton, right? And because private prisons are structured as real estate investment trusts, they depend on billions of dollars of bank financing. And that meant if your money was at Wells Fargo, there was the chance that it was getting deployed to the private prisons locking up immigrants. And that have always been part of the criminal justice system in the US, right? We incarcerate more people than any country on the planet. So we, along with the Families Bond Together Coalition, led this massive campaign that ultimately, and once again, building on decades of work, did convince 8 of the largest prison financiers to commit to stop financing private prisons. So Wells Fargo, Chase, BNP Paribas, all those same things. So we're very happy to say that. But the point is that if you are banking with a mainstream bank and you don't know where your money is spending the night, you might not be so happy, right? And that on realmoneymoves.org, we have a list of community banks and Black-led banks that are options for people who want to just take that first step of have your checking account somewhere else. Can be a great move to slide into impact investing.
That's fantastic advice. Thank you. So Anella's going to pop back in and we're going to hear her voice. She's going to read off some of the questions and see how far we get in the remaining time.
All right. Well, you already answered one of them, which was how as an individual without much capital can you approach impact investment? But we have another one. What changes do you hope to see or do you foresee in the impact investment arena in the post-COVID world?
So what I am excited about in the post-COVID world, because we will get there, COVID exposed so many of the cracks in the US economy, and the idea that we were really kind of living in 2 economies, people like me that get to work on the internet, and then people who do real things in the real world, right? And really expanding that definition of essential workers to include the people who pick our food, the people who staff the grocery store, right? That really keep us alive in very vivid ways, but are not compensated appropriately for that task, right? And not respected the way that they should be. And I think that COVID has led a lot of investors to think, wow, this economy is really fragile, and that we might need to base it on different values in the future. And how can I step up in this moment? And what's interesting, going back to the financial and social incentives, from a macroeconomic perspective, countries that have greater economic inequality always do worse, right? So it certainly fluctuates over time in cases. I'm always like careful to speak in absolutes, but that's been a lot of the history you've seen, for instance, across Latin America, and that has backslid substantially during COVID, some of the advances of the last decade, which is really just tragic. But the redistribution of capital is a great way to fix that, is a great way to address that, and to also create more resilient community businesses under more collective structures that are able to be more resilient in these sorts of times, and to form economies that are more focused on cooperativism. So I think that's one of the pieces that we get to pick back up. The other is that, I think I mentioned our portfolio is over half women and people of color. And I would say before that was cool, right? And that we have been really heartened to see more investors are really thinking about if you, so taking from a baseline, less than 10% of early stage capital goes to women or people of color. And less than 1.1% of global assets are managed by women or people of color owned businesses. And when you think about, like, in the venture world, sometimes people use the phrase, which is kind of gross and sexist in its own way, but spray and pray, which is the idea that you spray money around to a bunch of different businesses, right? You'll invest in like 60 early stage companies, and then you just see which one of them is going to become an Uber, right? Which is going to succeed widely. And when you think about, if you sitting in New York, which is, I think, 70% people of color, or the Bay Area, that's 60% people of color, and most venture happens in those two cities. If I just went to the top of the Ferry Building or the Empire State Building and I sprayed my money around, right? And it falls down on the ground, people pick it up, and that's my investment community. You would think my portfolio would be majority people of color, right? Like, this implies that as an industry, we have systematically gone out of our way to over-index to white men. And specifically 40% of those receiving venture coming from Stanford and Harvard, from just two schools, right? So that's where you really see, and I'm happy to write those stats as well, you see that something is fundamentally wrong. And the good thing is that if we accept that, once you express the desire to change, right, in any component of your life, then you just get to make changes and do it, right? So we've seen that the pipeline is there. I'm talking to literally 30 Black and Brown led funds right now. And we have mandates where people have said, I want to make sure that I am investing in more Black and Brown founders. And what do I need to do that? And the pipeline is there. So I think it's a great time for people who are now saying, gosh, I recognize that even just implicitly, I've contributed to systemic inequality, and I don't have to. I have options of what I can do with my money, that it's a great time to be executing on that thesis.
Wow, that, you've just summed it all up there. I can't even imagine a better outcome of this moment that we're in right now. Anela, do you want to pose another question?
Yeah, we have one more. So they say that social justice education begins at home. If my family was going on a social justice diet, what ingredients, food for thought, should we stock in the house, and what ingredients do we need to get rid of to detox in order to live social justice and social impact intentionally every day?
Well, Denise is my new best friend. I can't see you, Denise, but that's a great question. And I think partially, so much of our cultural diet is connected to media. And whether that's podcasts, that's music, that's books, that, like, really examining your media diet, I think is a big piece of that. And what are the proactive ways as a family that you can get access to more education that's going to fit your preferences, right? That some families are big readers, and the idea of taking on a book a month can be huge. Or it could be that you love listening to podcasts when you're in the kitchen, and maybe you haven't heard the 1619 series from the New York Times yet. Or that you could be listening to folks like Alicia Garza, Black Lives Matter co-founder, who has two podcasts, one with Ai-jen Poo and then another, Lady Don't Take No. That's her personal one. So there's definitely no lack of leaders to follow. And then the other great thing in the nation's recent attention around systemic racism, lots of great book lists that have been put out. And that some, I would note, of my like favorite historical fiction that is like beach books is things like The Warmth of Other Suns, that tracks the migration of Black families from the South out west and north. And it is a racial justice story, but it's also just fantastic writing. Similarly, Maria Hinojosa, who you may know as the host of Latino USA, that's another phenomenal program. I'm a senior contributor to Forbes, so one of the perks of that is I get access to pre-publication books. Maria's book is going to be out in September, and it is phenomenal. That I just basically turned over my entire weekend to it. And really getting into the depth and history of Latino organizing in the US is great. So I think that's a big piece. And then the other is not just consuming, but discussing. And I don't know your background, Denise, and I also get that our own positionality. I definitely, I can't see everyone. I also don't want to be making an assumption that I'm only speaking to white people, right? That everybody has their personal blind spots. And I think it can be kind of just taking on what's an issue that I really don't know about, or that I might hold some attitudes in that maybe I want to address. So I think that's the other as a family, that in order to do that diet, first you got to do the audit, right? So also looking at what's in the cupboards that needs some cleaning out. What are attitudes that you might want to question? So I can give a short example of that. I struggled for a really long time with the thought in the immigration debates of like, well, these are people who broke the law, right? And that I think one of the things of growing up white in America is that you often think that laws kind of make sense, right? And they tend to benefit you, and you're supposed to be law abiding, and that's very highly valued, which is very different than a perspective that unjust laws are not meant to be followed. I forget if that's Martin Luther King or sort of some activists who would have that quote, so don't credit that to me. But parsing through what is and isn't an unjust law, and really learning over time, one, that immigration, crossing a border used to be a civil offense, and that it's only more recently that became a criminal offense. And that also, given how incredibly complex the immigration system has become, we really don't leave people with a lot of options to be able to go through existing channels. And at the same time, we continue to turn a blind eye on industries that are so dependent on undocumented labor, treating them terribly in the process, right? That this is like all stories, right? There's a money story behind that story that maintains the status quo. And then it positions immigrants to be lawbreakers. So then folks who believe in law abidingness see that as bad, right? And it took me about a year of interrogating that and doing more reading and self-education for me to decide essentially that for myself, that I felt like those immigration laws are unjust laws and don't always deserve to be followed. And I think that that's a perspective that a lot of undocumented immigrants hold. So at any rate, I'm not saying that particular one is right or wrong, but just to say that sometimes we have to examine where our assumptions come from in order to move past them.
Okay, thank you so much. You know what, we're gonna have to leave it there. I had many more questions. I was thinking about BlackRock and like all these announcements that have been made recently about SASB and the GRI and a bunch of other places, but you've just left us actually on kind of a high note. I feel really optimistic. I feel like, we have an obligation and an opportunity right now to actually take the bull by the horns, do something on our own, and also move society forward together through this whole industry that is just poised for growth in the right way. So thank you, Morgan, for being such a tremendous influence on me personally and on so many who are looking for the answers and for some bright lights at the end of this tunnel. So thank you so much for sharing your wisdom with us today.
Thank you.
Yeah, and thank you everybody for joining us. And the next webcast in this series is August 13th with Rebecca Moses, who's the head of impact strategy for Impossible Foods. So that one's really fun because if you've had an Impossible burger, you might want to get on this call. And we now have an Impactorum YouTube channel, so these are going to start showing up there. And I just want to thank everybody for joining us, and I hope you have an amazing day.